What's up guys, Michael here. In this video, we're going to take a look at what is the federal government going to do in the next couple of months regarding to inflation. So as you recall, that inflation currently is still rising and they're planning to pump up interest rates, which will be detrimental to the economy. But at the same time, now you look what happened to the banks, because the banks really play a big important role. As I did a really small coverage on SVB banking, and what happened is they leveraged too much of their money into their bonds, and all of a sudden you had a bunch of investors pulling out. And you come think about SVB is an investors bank. They're basically looking for new startups, new tech startups. So this doesn't really involve that many of the consumer banks such as Chase, Bank of America, Wells Fargo. Those are the major players. So it does have an effect, and the interest rates will play a role. Now they want interest rates to go down, but at the same time is that won't be able to happen. Because if you look at the BLS, the Bureau of Labor for Statistics, you look at the inflation report, which I'll link down below. This was also mentioned on Clear Values video, where inflation right now is still sky high. So the Bureau of Labor Statistics, it shows that most commodities are going up. Overall, it's going up in general. When you're trying to keep a 2% inflation rate, you're averaging around nearly between 5 to 10%. In certain categories, it goes up to 25% and even 50%, such as gasoline. So when you look at that graph, and you can basically relate what is the Fed trying to do. Because right now, the stock market is really irrational. They used to do irrational things, and that's why a lot of people like to follow the herd, which recommend do not do, and do your own research on that. But when you look at the Bureau of Labor Statistics, it shows that most items are going up. For example, if you look at new vehicles coming in, that went up by a little bit. You look at between 5 to 10%. All right, that sounds about a fair deal, thanks to supply chain issues. But you suddenly look at energy, that went up like almost 25%. And you look at gasoline, that went up almost 50%. So those two categories went up a lot. And you have another category, which is electricity. But you thinking, is it energy electricity? Energy could be a broad range of things, such as using energy to power your cars, energy to power your homes, maybe energy to create products, because it could mean a lot of different things. But electricity, in this case, how they label it, is mainly for consumption use. So like basically commercial buildings, homes, what we use at home, that went up skyrocketing by 10%. So you notice your electric bill is going up, but not as much as gasoline. Gasoline shows 50% over these past couple of years. And it's really great, and it's really understanding what the Fed is trying to do. When they raise the interest rates, they're trying to curb all the categories down. So you look at shelter, home prices have gone up during and after the pandemic. So steadily following the trend, and also like the pandemic happened, then the prices shot straight up, and now it's going back down, but not low enough to the point which is trying to hit pre-pandemic levels. And would it go lower than that? It's very unlikely, because it's an issue of supply and demand. Besides interest rates, supply and demand have to play part of the role too. And what the stock market is trying to say, a lot of people are trying to say, and they're trying to say that the Fed is going to pivot against interest rates, meaning they're either going to stagnate, and they're guessing they might drop it. But when you look at this case where how inflation is going, because the latest report is usually the previous month. So the previous report is in February 2023. So if you look at that report, right now inflation is still really high for every category, even food itself. Food itself, I'm pretty sure everyone has felt that. If you watch this video, please click the subscribe button down below and a like button so it can help curb inflation. But out of seriousness, you look at food, it's around 10%. So you go out and buy food and groceries, you go out and eat in restaurants, you maybe go out to the bar. You notice that a lot of prices went up. And right now, the BLS, which is Bureau of Labor Statistics, suggests that around 10% of all food products are currently around 10% worth way more than its current value, because of basically interest rates and supply and demand, which they're trying to curb, but I don't think it's going to happen. The main part is what the Fed's going to do during coming in the March meeting. And personally, a lot of them are saying, including all the speculators, investors, saying by June, they're going to pivot and they're going to bring it back down. And I mean, you sit back and take a look of what's going on in the background without all the noise, including my video, which you should click the subscribe button, like button down below. But just look at the chart. Take a look at the link down below, which I'll link to the government's website, and it shows you statistics of what's going on month by month and what's inflation. So when you see the graph, yes, it's coming down, but it's not coming down to the point where within, let's say, by June, that they're going to start lowering interest rates. Because based on this case, on the previous 2 months, January and February, it's basically went up by a little bit and it went down a little bit. At this case, it didn't achieve its goal. So personally, I think they're going to raise interest rates. As we're pausing it, a lot of markets speculating that you might see a short boom, which in this case, make your own financial decisions, speak with your financial advisor. I'm just a YouTuber, but personally, for my opinion, I still think they're going to raise interest rates because what their goal is trying to achieve is not getting it done. Their current interest rate level is not high enough, and they refuse to add more productivity, which meaning is open up more smaller business, give them more benefits. And they're trying to hurt the economy by lowering jobs, as you heard from other YouTubers talking about this market. And in this case, it didn't really help too much because, yeah, you heard that Amazon laid off 9,000 employees within this week, but at the same time that does include all the other markets. So by June, we'll see what happens. March is probably going to be the same as January and February. But when you look at the next coming months, it's going to be really interesting what they're going to do. And personally, for my opinion, I think it's probably going to be until 2024 because based on the inflation, and you look at from energy, food, shelter, you look at electricity, vehicles, kind of, it does matter, but not as much as the ones that need to supply your daily living. Your daily living is the most important one. Those are not going down as fast as they hope. So when a market thinks they're gonna pivot and just stop their interest rates and base at 5% instead of going up, I personally don't see that's gonna happen. So that's it for this video. I hope you guys enjoy. Please like, share, and subscribe, and I'll probably do another update on this video. Peace.